So in July, this inflation point was actually a deflation point, and it was below zero. So this is what we're going to be replacing. More than likely, we're not going to be replacing it with a low deflationary point. It's going to be something up higher. In fact, in July, it averaged over the history of keeping track of inflation numbers, it's been 2.5. So I actually expect, and I haven't heard too many people say this, I expect in July that the headline CPI number that we all hear is actually going to go back up. Following that, in August, we have an inflation point here that's just below 3, and we can see in August it's averaged about 2.75 historically. So here I feel like it's going to be pretty flat if we replace it with something identical, or maybe once again increase for a second time. And then in September, we're going to be replacing this 5% point, and we can see that historically it's been 2. And so this is when I finally, after 2 months of going up or level, I expect it in September to start going back down. Now, and you can see here, October, November, December are usually pretty easy on inflation historically. So I expect inflation to get really sticky right about where it's at right now at 3%, because it's going to bobble a little bit higher before it starts to come back down. And then in the winter months, hopefully it starts to cool back off. But I think the Fed is trying to get ahead of people freaking out by raising interest rates prior to the headline CPI going up, and just to keep everyone. So that's my prediction on why they are raising right now 2 more times.